We'll start. Hi, I'm Liz Egner with the Egner Group here at RE/MAX of Reading, and today I have with me John Slavinski with Spring Ridge Insurance. Lots of us have had homes for years and insurance for years, but we don't know what the heck all this stuff is. So John's going to talk a little bit with us about what replacement value means, what replacement cost is, what are deductibles, what are they for, and whatever other questions we might think of. So John, tell us a little bit more about insurance.
Thanks, Liz. I appreciate you having me here today. We're a new company based out of RE/MAX of Reading. First thing, so replacement cost. What is replacement cost? Well, you want to take a look at your insurance policy, and the first page that you want to look at is the coverage summary or the declarations page, because that's going to go through all the coverage levels that you have. Coverage A, dwelling. Replacement cost is based on the estimated cost to replace your home today. In a lot of cases that will be higher, if not double, than the estimated market value. So if you purchased a home for $100,000 and are wondering why the replacement cost and the dwelling coverage is at $175,000, that's because the cost of materials, inflation, labor has changed over the years since that property was built.
That's a really good point. Not to interrupt you, but that's a question we get a lot. How come it's so much more? And it's a really good point. I think that's something we never really look at.
So, just as a quick example, if you have a home that's 20% brick exterior, 80% aluminum siding, if that was rated on that, but it's really 50-50, the amount that the premium could change is 5-6% on your policy. So dwelling coverage drives a good majority of the premium, and that's why you'll really want to take a look at your replacement cost and your dwelling coverage to see if you're overinsured or possibly underinsured.
So we find that on what's called the declaration page.
Yep, declaration page, coverage summary, and that kind of breaks it down for you. It's a little overwhelming at first, but once you really drill down and evaluate what you have, you can understand it.
Probably something we should do that we've never done. Okay.
So a deductible, what is a deductible? If you suffer a loss, you need to submit a claim to your insurance company. Basically, the deductible level is the amount that you'll have to put out of pocket before your insurance will kick in. Deductible levels can range from $500, $1,000, $1,500, $2,500, even $5,000. Generally, we found that the amount that the deductible changes the premium between that $500, $1,000, $1,500 is about $40 to $50 when you move that up or down. Each insurer is different. It has different rating factors. So the 40 to 50 estimate could be 60 to 70 for others, but generally the carriers that I've worked with, I've seen that change that amount. What you'll want to look at with your deductible is, why is my deductible there? Did you purchase the home 5 years ago and you selected $500 on the advice of your insurance agent, but now your financial position's changed and you can sustain a greater amount of money out of pocket if a loss should occur. So maybe you'll want to adjust that deductible up to save a little bit of money.
I think that's a good point too. We have to figure out if something goes wrong, which is why we have insurance, what can I afford out of pocket?
Yep.
Because one bad thing happening can really affect us.
Yep, and then the final thing that I wanted to go over was discounts. So last time you reevaluated your insurance company, maybe you were working for a different employer. Well, the new employer that you have offers a discount with a certain insurance company. You can sometimes save 5 to 10% if that insurer offers an affinity group discount. Also, deadbolt locks. Maybe you didn't have deadbolt locks before, but you had them installed. That can also result in a credit. Fire extinguisher, smoke detectors, a central alarm system. Those are all things that can really result in additional discounts for you on your homeowner's insurance policy.
Okay, so if people are reevaluating, I suppose that's something we should do every year, that we probably don't do that either.
and the big reason for that is because rating factors change. Insurers change with the market and how other insurers are competing with one another with pricing.
Okay, lots of good stuff. Of course, insurance is very complex, but these are just some basics that we should all pay attention to. So if you have any insurance questions, call John at Spring Ridge. If you have any real estate questions, please call the Egner Group at RE/MAX of Reading. Thanks for listening.
Thanks, Liz.